I've had several low points. End of the day, I would come and I'm not sure what I got out of the day. I did use external help because I was depressed. People think, वो जब size आएगा, we'll figure out, right? It doesn't happen that way because it's a mindset issue. It's not a technical issue. Advice would be to try and confide in someone. It can be your spouse, it can be your parent, it can be a sibling, it can be a good friend. But I think you just need someone to hear you out and you will automatically feel the load reducing, right? A lot of people kind of think that they have to do the heavy lifting by themselves. It's okay to kind of be vulnerable.
Welcome to the India Opportunity Podcast. Hello and welcome everyone to today's episode of the India Opportunity Show. Today we have the privilege of speaking with a true visionary in India's entrepreneurial and investment landscape. Rohit, the co-founder and director of Cloudnine Group of Hospitals, has been instrumental in transforming maternal, childcare and fertility services in India, making Cloudnine a household name and the country's leading player in its sector, with revenues of over 1,200 crores. From growing the company from scratch to preparing it for public markets, Rohit's journey is one of grit, ambition, and long-term vision. With over 23 years of entrepreneurial experience, Rohit has not only excelled as a founder, but also as an investor. He is presently the managing partner at Peer Capital, an early-stage venture capital fund where he supports founders with the same level of dedication and insight that led him to his own success. He's been recognized by the Economic Times and Business World as one of the 40 under 40 leaders and continues to shape the future of the Indian startup ecosystem. Rohit's unique perspective, both as an entrepreneur and investor, gives him a deep understanding of the nuances of the founder journey and what it takes to scale businesses in today's competitive landscape. Join us for an insightful conversation around building a family office, raising a venture capital fund, and also building a phenomenal business over 20 years. Thrilled to have the opportunity to share Rohit's story with all of you today on the show. Hope you enjoy watching. Hi Rohit, welcome. How are you doing today?
Hey, Shrishti, I'm good. Thank you for having me here.
Thank you so much for spending your evening with us today. It's a pleasure to have you on the show. You've been a truly fantastic operator and investor in the Indian startup ecosystem, and I hope people can draw a lot of interesting insights from our episode today.
Oh yeah, I don't think I've done anything as an investor yet. I think time will tell. I've been a happy angel investor, and I had literally nothing to do other than tap into my network. But beyond that, I think as an operator, yes, life has been kind. I think we kind of saw a few things that we could kind of do and build the sector. But as I keep saying, wiser for the day, we'll hope to kind of turn a good one in. So all in good time.
Speaking like the true humble person that you are, you started Cloudnine in 2006. Let's talk about how you scaled Cloudnine from a single hospital to a leading chain of hospitals in India that now does over 1,100 crores in revenue.
Yeah, so look, I think so to be perfectly honest, I was not the one who started. I was part of the team which started, but it was largely my aunt and uncle who had the original idea. They came back from abroad to kind of set this up in India. I was just perceived as someone who understood a little bit of business thinking and such, given my past. And they said that, hey, do you want to come and do this with us, right? So I actually took it up as a challenge to say, maybe I'll give it a year of my life and see how we go. So I'm more of an accidental sort of implant in this whole thing, and I keep calling them as my angel investors. They took a chance on me, so hopefully I came good on it. But the general sense, honestly, Shrishti, was I think there was no ambition amongst any one of us beyond just the first unit to even think that there is a scalable proposition, right? So this was good old days. We started in way back in 2006, 7. And there was absolutely nothing about how do you kind of raise capital. It's only about if you had a little bit of capital, the only other capital format was debt. And if you had the good network and ability to kind of use debt, maybe there's some way to kind of put it into use, right? So it was honestly much, much simpler times. And for us, it was, look, we were taking a very bold differentiation in terms of how things were at that point in time, right? So we weren't even sure if this is going to succeed or, are we going to be able to generate the sort of goodwill that it kind of needs and such, right? So It was all, at least from the family side, it was all hands in to say that, this is what we want to do. Um, and I think from the plan that we set out originally in terms of, how do you achieve the first milestone of breaking even so that you don't keep pumping capital in. And because capital was very, very, limited with all of us, there's only so much that we could do. So the ambition to grow actually came much later. In fact, between the first one to the second one, there was a gap of about 5, 6 years, right? So the second one came about only in 2012. So you can imagine that, in today's day and age, if you have something good going on, to wait for 6 years to kind of
Yeah.
put your next sort of unit out, it's impossible. So I think we had the luxury of time. I think we had the luxury of starting at the right place at the right time. So a lot of actually stars aligned towards saying that, this is how you can kind of do it. But once I think we realized the opportunity that this is something that we can grow, my enlightening was all in B school, where I took a break and graduated from IIM Bangalore. All the discussions that I had in the classroom, all the discussions I had with the professors, with all the peers there and such, right? I think kind of opened up my sort of eyes in terms of, what sort of a playbook can you actually build without even knowing how to kind of do it, right? So I think it started from that. Post graduation is when I actually started putting my mind to saying that, how do you kind of build a scalable proposition of this nature? What are the things that can actually kind of become amenable to growing and such, right? So it was very simple in that way in terms of construct. Again, not knowing how or where capital is going to come by, Srishti. I think we live in a very different day and age today where, we have access to good people. Forget capital as an outcome. How do you kind of have good conversations, information being out there, state-specific investors, sector-specific investors? There's a lot as an ecosystem that's evolving in our country, but back then there was literally nothing, right? You had to go and figure out everything yourself. So it took a lot longer to even have conversations, right? So I think once we were able to strike the right sort of balance in terms of inviting participation from external capital, our first investor was Matrix. And a lot of people don't know this, or maybe some do, is, other than Avnish, who obviously heads the fund, and it was he's the founder of Matrix in India, which is now called Z47. The key, the key instigator in this entire, or the key guy in the orchestration was this guy called Ashish, who's now the founder of Off Business, which everybody knows. I think between him and Ruchi, his wife, they have two unicorns, like still a very unique thing in our ecosystem.
Yeah.
So it was actually Ashish who I honestly think he saw something beyond us as founders that we could see, right? Because we were always, a blue sky approach on everything. Ki, हाँ हाँ सब कुछ हो जाएगा, we'll do everything and all that. But I think he had the ability to kind of see what is the sort of playbook that you can kind of build here, right? So I give him huge credit to kind of pushing us in the right way, also kind of, giving us the right sort of capital to kind of get us to where we need to go, right? And from then it started the treadmill. I had Sequoia come in 2013. Amazing sort of experience where everything about what was in our heads, how do we kind of translate into paper to kind of say that how much of it actually makes good sense from building up, physical infrastructure, or building up processes which can be scaled, or building up culture which can be, easily kind of spread across the country. All of those things, right? What is something that would be individual? How do you kind of institutionalize? So that's something which happened with Sequoia coming in. Then True North came in, which is our first private equity. This was in 2016. Honestly, between me and you, this is when I got introduced to a term called EBITDA. Uh, uh, but the beauty of the thing was, thankfully the business had a factor called EBITDA by itself. So we didn't have to go around soul searching for where is EBITDA going to come from. But from initiating a discussion on how do you kind of start looking at EBITDA to kind of making it happen, strategically took a year or more, right? Because a lot of the sort of initiated actions today kind of take time to yield results, right? So that kind of again put us into good stead. And then came the other big boy P's. There was NewQuest, which then became TPG, large secondary buyout firm, which took out Matrix and came in with some bit of primary capital into the company. good believers, good enablers, but strapped along for the ride. And more recently in 22, this was when we were prepping to take the company public. Before we could kind of make that sort of a jump, we had everything ready. We had the green card from SEBI and so on, but the markets had changed, so we took a little bit of a pause, and that's when Temasek came in. And Temasek is Temasek. I think they've been fantastic enablers, extremely long-term oriented. They have tremendous aspirations for healthcare in India. So I think we have a good set of partners on the board. So yeah, that's been the journey. We're now 37 hospitals strong, depending on when this podcast comes out, but we're 37 hospitals strong. You mentioned the revenue number, not me. But other than that, it's scaling well. We have a very, very strong team in place, which continues to kind of deliver on the vision. We have six more projects coming up, so we'll be about 44 towards the end of the financial year. Idea is to kind of get to about 50 centers or so, at least from a line of sight, and then probably try and revisit the whole going public sort of symposium, right? So it may happen next year, it may happen after a year or so. But the idea is to kind of deliver on the particular prospect of building a large network in a great country like ours, where this sort of a need, this sort of an aspirational need is like very, very predominant across pretty much every city that we can set foot into, right? So I believe we have a good thing going. We still need to execute well.
I think you have an amazing thing going, Rohit. Not just a good thing, but so many interesting things to dive into there. But I remember even in our first conversation, it came up that I was a proud Cloudnine customer. And you told me that, it often comes up in conversations where the first interaction you end up having with people is a Cloudnine story, right? So you've truly touched the lives of so many people in such a meaningful way at such a crucial step in their journey as well. But tell us about what product market fit felt like for you, right? Since you mentioned that it took you 5-6 years to open up your second center, and then it scaled so quickly to now 37 centers, and with the sites to go on to 50. As investors, we are often telling our founders to establish a playbook first, build SOPs, and then focus on scaling. So, what was that product market fit moment for you? When did you feel in your journey that it was time to go out, raise external capital, and put the fuel to grow your business?
So at least in the beginning, Srishti, it was more about being able to find capital to grow. Like I said, we had very limited access to capital. So that was not enough from a scalability point of view. From the first center, we had given ourselves about a 4-year window to kind of hit break even. And this in context of numbers and specificity, this was about 1% market share of what Bangalore would be. So Bangalore at that time, Srishti, 2005-6 ka data, was about 400 deliveries a day. Okay. So our one center, for it to become sustainable, the required number of deliveries, at least purely on deliveries, was 4 a day, right? It was 1%. Seemed like something which was possible, and also immediate market research showed that there were about 3 or 4 gynecs who are actually doing this without even knowing that they're a full walking, talking business model on their own, right? So there were opportunities unseen. So we said that 4 years is a good window for us to kind of get to that number. Thankfully, we actually hit that number in the eighth month itself, right? So there was a fair amount of, let's say, goodwill, or a fair amount of appreciation to what is the sort of product that we had put together. But despite that, we didn't have the sort of tools or the experience to figure out if this is a one-trick pony, or if this is, simply because it was all of us personally involved. Is it even scalable beyond one? Is it a Bangalore phenomena? Like we keep telling a lot of founders nowadays to say that, "Hey, listen, if it works in Bangalore, it's no guarantee that it has to work everywhere else, right? Like, because Bangalore just accepts everything, right? So, we didn't even know that, honestly, right? So I actually think that we kind of took it as it came. The product market fit had actually come in pretty early. Like I told you, that there was willingness. So we kind of looked at it in 3 ways, if I can recall. So one was the actual clinicians, right? So a big part of what we do is to also kind of have the clinicians on board And if you think about it, Shrishti, we don't have a patented way of delivering a Cloudnine, right? It's the same normal versus C-section. So
Yeah.
how do you kind of attract the top talent to actually come and work with us, to believe in the vision of what we're trying to do, right? So I think the first validation was from the clinical community in itself. The second was from the payer network, right? Because this was something that, I actually think that it's a good win, for us to kind of achieve early on in terms of, how to kind of make that ecosystem work, especially the given sort of the aspirational middle class mindset that all of us are growing with in terms of, having access to good corporate insurances and so on, which allowed like a maternity benefit, but no one was kind of using it fully. So I think that was a good win. And the third obviously was the mothers and fathers themselves kind of saying that, hey, this is something they really wanted, right? So I think somewhere we had a higher degree of association with the mothers and fathers wanting this because we had done so much of, our own sort of research. There was obviously global sort of inputs and inference which came from my aunt and uncle who were, who had originally conceived the entire, the entire offering. Uh, to then being able to build on the clinicians and the peer network, I think that's what kind of enabled us, right? So this then kind of made us put like a playbook version one, which, we were able to only put into place when we had the sort of capital. So for us, I think PMF happened pretty early. But was it a scalable PMF? Honestly, did not know. And in fact, I think PMF for us has always been about a matter of evolution, like something which works in Bangalore works differently in NCR, works differently in Mumbai, works differently in Pune. And how do you kind of tweak some of these things? We actually feel that we are very localized players, right? So by that I mean, yes, there will be about 80% of everything that we do at the back end of it would all be same, but there's about 20% which is more flavored towards that particular region, which is more synonymous to that and more relatable, right? So for that, your playbook has to kind of allow that sort of fungibility, right? So this is a matter of evolution. Like even the size of the facilities that we used to have, to the offerings and all of that, that has also evolved over a period of time. But the fact is that I think we like to kind of build this alongside our customers. And the beauty of what we do is the raw simplicity, right? It's to say that we will do some things and we will do some things only, right? We are not going to tomorrow turn around and say, hey, you know what? We're great at this. We'll also try and go take a shot at orthopedics or oncology or neurology or nephrology, right? No, I think we have a good thing going. The merit is to kind of keep going deeper and unlock more value. And I think that's what been our sort of, revelation, which probably the industry kind of did not foresee because they just saw this as something which will just happen. And the more time we spent, the more sort of resources we put in, we were able to unlock more value, right? For everybody, like I said, for the clinician, for the ecosystem, for the mothers and fathers themselves, right? So I think that compounding effect has given us to has enabled us to kind of build a very strong PMF, and that continues to evolve.
Very interesting. And let's also talk about that fundamental choice, right? Because it was such a critical decision to go deep versus going broad. A lot of founders that we end up meeting, these days want to go horizontal very quickly without nurturing the benefits of going vertically deep. But in your case, especially in the health tech industry, going deep really helped in your and worked in your favor. I'm sure a lot of investors that you were meeting at that point of time would have had different points of view because most of the health tech deals, at least at that point, were done by private equity, right? And private
Yeah.
equity world works very differently compared to a venture capital ecosystem. Both return profiles look very different from an LP perspective, but also how they think differs a lot. And you've raised from both venture capital and also private equity funds. So what was that difference in thinking that you personally observed? And how did you know that going deep was the right choice? Because as a founder, you always have self-doubt that am I doing the right thing, and you can't know these things, right? You can only know in hindsight. But what were some of those thoughts at that point?
Again, I think the ability to keep things simple was the only rational fact, Srishti. I think again, going back to our chairman founder, Dr. Kishore, he's a neonatologist, right? So his immediate fuss about being a fantastic clinician is the same as any gynecologist, which is the baby in the womb, right? So I think I don't think we saw. So let me rephrase that. In terms of having a strong conversation between a neonatologist and the gynecologist, both of them understand and appreciate that they have the same sort of intent and outcome-led thinking there, right? So for us, it was just about doing more of it. Now, I've seen situations where there's a cardiac surgeon who kind of put up something like this, or an opthal surgeon who kind of put something like this, or somebody who just thought of this as an opportunity but are not from the same specialty. And I kid you not, Shrishti, in clinical community, they just don't see eye to eye, right? They just don't see eye to eye from a specialty to specialty. I don't know why it's like that. I am an engineer. A lot of us engineers don't even think like this, right? If there's someone else doing a great job, we want to like work a lot more with them. Where there's some barrier system which works in the clinical community. I've still not been able to figure out. But so this the direct sort of correlation between what the clinician on the top wanted to do to the clinicians who will enable this entire ecosystem was very, very direct, right? So we saw that a lot of compounding on discussions and thought processes were actually very, very pertinent to this aspect, right? So for us, it wasn't even about thinking about something else, right? Where we did people come up and distract us with that proposition? Absolutely, right? But I think we just stuck to it to say that, look, we don't know enough, right? We need to be able to go deeper, right? So that's the same thing we even go to even now, right? We may know a lot of things, but we still believe that we don't know enough, right? So we just keep going deeper. Um, Not just with us, I think my whole philosophy has been, I think especially in health, Shrishti, I would urge people to kind of go deep in one thing, right? Because it's very, very, like you said, it's hugely distracting to kind of become a horizontal sort of proposition very fast. But I think very few people succeed in something like that. There may be other sectors which are more prone to a horizontal approach than a verticalized approach. You see like early signals in terms of where you're able to capture some of those, signals and work on it. But I think in healthcare, I think the outcomes are anyway a lot more, it takes a lot longer, right? So if you're sticking to something to kind of go deep and build value out of it, I think verticalize is the only way to kind of build something strong in my view.
That's fascinating to know, and also tell us about that decision from an investor lens, right? Because very often I've seen that as investors, sometimes we get it wrong by giving founders the wrong advice on terms of where they should probably go and focus versus and founders like you don't listen, which is good for the business ultimately. But so tell us about that decision where a venture capital investor was probably looking at it from a 100x kind of a bet perspective versus a private equity player. You have True North, etc., on your board. So, like, was there a difference in thinking, and was your experience different in terms of working with them, and how did you manage their expectations?
Yeah, I think so. Look, this was again, like I said, during simpler times where I think the expectations was a lot more limited towards what the opportunities presented themselves as. I keep joking with both Matrix and Sequoia that they fell for the name Cloud, thinking that there's some technology in it. But it wasn't really there. But like I said, it's a joke. No, so I think, look, honestly, at that time, now that I understand a little bit of portfolio construction myself, I think this was one of the things where somebody would have thought that, hey, listen, I won't probably lose money. Will it be a outlier and give me like 100x? Probably not. But will it do well for me? Probably yes, right? So I'm just thinking allowed to say that maybe that's the sort of rationale with which someone would have done this. But I think at that stage, honestly, there was a lot of willingness from the likes of a Matrix or a Sequoia to actually look at opportunities of this nature, which are brick and mortar, honestly. Scale is not a direct correlation of the capital you have because it takes time to digest any sort of capital ingestion which happens into the company, right? It's not कि आज पैसा आया कल server space बढ़ा दिया and we can service more customers. It's not as simple as that, right? So I think people understood that to a fair degree. Possibly now we have a few more specialists who kind of deal with some of these things across different stages. So I think we were there at good old times where people kind of understood this staging, where you typically take company to a particular level. It started with something like a seat grab opportunity or a land grab opportunity to say that pehle jaake just go put your tent in and say we are here and we are here to service, right? To then kind of putting logic around some of the intuitive, first principles across how you kind of build some of these things to then having a scalable playbook where you can actually go and conquer markets, right? So I think P's kind of come in on that, the latter that I mentioned in terms of, where there is a proven sort of business model and all it needs is capital for you to kind of scale, right? So I think we were able to kind of go through that journey ourselves. Now I think, given the entire outlay on tech and, the kind of finite timelines that people look in terms of being able to drive outcomes, a lot of what healthcare kind of sees today, and this is my unfortunate positioning as well, to say, I don't know how much of it is VCable, right? I think some of them can be like extremely good businesses, but will it fit the sort of a VC framework or something? I'm not sure. So, are family offices better situated to kind of enable some of these things? Maybe yes, right? So, somebody like you guys and all who probably have like larger appetite from a time frame, but you know that there's a good thing going in terms of category creation, ability to scale well, I think can work really well. And I think we are now also seeing a little bit of movements where private equity are also able to come a bit earlier to be able to kind of, deploy that sort of capital. So the lines are a bit blurred at this time.
Yeah.
But I think back then it was just keep your heads down and build, right? So that's what worked.
Yeah, I think you're also talking about a very simpler time where there weren't that many opportunities to fund in the ecosystem as well, right? But here
Absolutely.
now in 2024, we have so much entrepreneurial energy in the country. I think times have completely shifted. But any thoughts on the adoption of tech in the healthcare segment overall? So much has changed over the last 5, 10 years in terms of adoption of insurance in India and also technology by hospitals. There are all these on services which provide insurance at the spot at the hospitals. So that's happening. And then on the other side, AI is bringing in so many structural changes, right? In terms of hospitals being able to utilize all the data that they had but could never potentially benefit from, and also use cases in terms of diagnosis and a lot of other things. So how are you seeing this evolution with tech and AI over the next 5 to 10 years?
Yeah, so look, I think our country is probably a prime candidate where technology can play an amazing role in terms of improving efficiency, right? Um, look at how we kind of generate data. It's largely unstructured, right? There is no one way of generating data as a clinical establishment of any nature, pharma, diagnostic services, equipment, whatever, right? There's no one way of saying, all of us will produce data in this format. The government's working at it, but regulations usually lagging on some of these things to kind of prove that diktat out. Um, so I think there is a definite opportunity, but I think on the same time, Shrishti, I think I'd like to call out that caveat that the sales cycle in some of these things are going to be extremely long,
Yeah.
right? It's not as simple, and sometimes when we wear the consumer hat, you and me, we can actually point at something which is broken in the healthcare system and say that hey, this needs to have a better fix, right?
Yeah.
We are happy ordering stuff on quick commerce. We're happy booking tickets. We're happy doing Digiyatra. We're happy doing a lot of those things digitally. But when we go to a hospital, we are all happy sitting without any technology intervention and still okay with it, right? We're not complaining. We're not asking why can't it be better? Because what happens is it's not as direct as what a consumer feels as how this needs to be kind of, fixed because there is an entire layer in between which has a higher calling, which is a physician layer, which needs to kind of think 500 times more than what the consumer thinks, right? Because ultimately, in some form or fashion, in healthcare, there is a life involved in whatever form or fashion, right? That impact that you have. I think a lot of young founders kind of underplay this entire notion to say that, technology can solve for it. In isolation, can it? Yes. But we've also seen it in developed countries and such, right? It cannot work in isolation. It cannot do that. And I keep saying this. Most people kind of again miss this point. And I've been bold enough to say that in healthcare, I don't think disruption will happen in isolation. That suddenly you won't see something that will come about and say that, you know what, I've disrupted how healthcare works. It doesn't work like that. You have to actually take the ecosystem along, right? So that means you have to give yourself that much more time. That means you have to kind of really understand where the clinicians are coming from because all of us are eventually going to go to clinicians in some form of format where we are dependent on their ability to decide, right? So whatever we can do to kind of make them efficient, I think will have a stronger sort of efficacy and fit. right? So anything which comes from a consumer first sort of thing, I'm honestly very skeptical because I think it's a huge cat losing game, and I don't know if the retention mechanics are good enough or AOVs are good enough or something like that, right? But I think wherever there is an ability to kind of work with clinicians where they are the ultimate benefactors, and then, as a correlation to that, everybody else around them kind of succeed. I think that's a good sort of thing to come with, right? But over the next 5 to 10 years, I think as a combination of regulation, as a combination of high intent amongst the physicians, and a serious sort of push from consumers themselves to kind of ask for better things and more. I think we'll see a good amount of technology adoption. People also have this, inhibition to say that doctors don't like tech. I would disagree. I think doctors like a lot of tech. If you think of some of the new age interventions that are followed with and all that, it just takes longer. It just, ultimately the doctor has to kind of decide, keeping that person's life in mind to say what it means, right? So I think it just takes that bit longer, but I think we'll see some good outcomes eventually. So the way to kind of possibly look at it, as my view, would be a B2B to C, would be a better sort of corollary in terms of how people are looking at tech, than a B2C, right? I'd be very surprised if someone brings in a large outcome purely on a B2C sort of format in health. So that's where I'd kind of say it.
That's a very strong insight for someone who's seen this up close for the last 2 decades, now sharing with our audience, because a lot of our audience are founders also. So I think they will benefit from this definitely. But now let's also talk about the fact that, Cloud9 is at the cusp of going public, but you did something remarkable by hanging your boots and letting professionals run the business. This is very different from the founder mode conversations we are having in the tech world these days. How did you decide to move on from the company that you started and grew?
Oh, well, it wasn't an overnight decision, Srishti, and it
Of
wasn't
course.
and it wasn't a decision in a half either. I think I think what I can kind of relate myself to founders would be to say, I think everyone needs to kind of identify their own strengths and weaknesses. I think strengths are a bit easier. I think weaknesses are a little hard. It needs a lot more introspection. It needs a lot more, possibly a little bit of executive coaching also to kind of understand what you're good at, what drives you, what motivates you, right? So in my case, I think I had enough sort of help and wisdom around me to kind of understand what's my make, right? So I kind of derived a lot more energy in building new things or, creating new things or helping more people out and stuff, right? So I think I saw this as a perfect opportunity when the company was trying to prime itself to go public, to completely hand over the reins to professional management, where I think they are better equipped to kind of do what is needed from a public company behavior point of view, right? So I saw this as a perfect opportunity to try and pursue on the investing side of things. It was something that I've been planning for a while. So I'm just happy that, I just found amazing people who could also believe in the vision, that, I don't require to look back and say, what did I do? Right. So I think it's really a partnership. I think we just found the right people who could actually do this, that they've been able to take it from the place that they got it to where we are today. I think it's just fantastic, right? So I couldn't be prouder, honestly. But as a matter of planning, it was something that was on my mind to say that, how much more of this can I do or should I do? It was already about 16, 17 years. And honestly, running healthcare ops takes a lot out of you. So, I was honestly at my wit's end as well to try and do some of these things. And it was at a fair degree of independence in how the system was working, which did not require my intervention on every single thing. And I believe in that, old adage which says, in a business, take care of your people, and people will take care of your business, right? So I think that adage kind of stuck with me, and that's my one inherent belief, right? To say, empower people, and they will kind of do the right thing, right? So yeah, it's been good so far, Srishti, and I think that I've loved the transition. Couldn't be happier about how the team is kind of, delivering to the vision.
Yeah, we'll talk about the transition in just a minute. But you touched upon something very interesting, executive coaching. And, these days, I think executive coaching and also a lot of conversations around founder mental health and founder burnout are coming into the picture, where obviously, some founders feel there's tremendous pressure on them to perform. But always, there is a little bit of help available from coaches, from therapists to be able to get through that. Do you want to talk about the founder struggles a little bit? Because, I'm sure in that long journey, you must have gone through a lot of phases where you felt very low. But how did you get yourself to bounce back from those challenges?
Yeah, I mean, look, we can have another 1 hour podcast for that. But no, I think in all honesty, Shrishti, I think most people don't realize that even having co-founders, it's still a very lonely journey, right? And the more you do of it, I think it just kind of becomes that much more as a regimen. So, and as a founder, as an entrepreneur, there is no switch off, right? And I think that's what is the mental burden of things. Whether you're in the shower, whether you're playing with your kid or you're on a plane or whatever, right? I think that just clock kind of runs. I think for me, I've had several low points where, end of the day, I would come and I'm not sure what I got out of the day. And, I recently kind of said this in another podcast as well. I did use external help because I was depressed. I did not know. And, I did use help, who kind of, then enabled me to kind of grow beyond that and be able to kind of, overcome that. And honestly, at that time, I did not know what I was going through. This is beyond the executive coaching. I think executive coaching was something that I put my hand up to say that, I'd really like to kind of take this up. I've always benefited from, sitting around smarter people, understanding from their experiences. I'd like to believe that I'm more like a sponge, right? If I find myself with smart people, I'm just there to kind of observe and take in as much as I can. Executive coaching helped me in that. There was a gentleman who's been like the CEO of very large companies, and he was an executive coach himself. I got introduced to him, and we spent like a year and a half. We're still in touch. We just wish each other on various things. His daughter too became a customer of ours. At our Chennai unit. So he was telling me it comes a full circle. Couldn't be happier. But the fact is, when you see through the eyes of someone who's kind of looked at some of these things, right? And as founders, somehow, I think one specific thing we miss, Srishti, is always the barometer of time, right? For us, we just feel that everything has happened today or everything has to happen yesterday, right? So we don't get that sense of time, or we don't get that sense of trusting people to get things done, right? So I think for me, that was what was my learning. And like the line that I shared just previously to say, I think for me, that development in myself, where you start from doing everything yourself to kind of delegating and actually delegating. I'm not just saying give someone a task for the sake of giving a task, but to completely transfer ownership in small parts and stuff, right? So that took a lot of time. That took a lot of for me to introspect and understand what it means, right? So that I couldn't have done by myself. I used executive coaching for it. In terms of also decision making, how do you kind of overcome like intersection or cross sections of decisions where you don't possibly like what is happening, but how do you kind of deal with it, right? So some of these things beyond just founders, you need safe avenues to kind of talk about it, right? So I think it happens at particular stages of a company. I wouldn't say that everybody needs to kind of go through it, because otherwise then you kind of you box away from being able to learn from failures and mistakes, right? I think everyone has to go through this. But I think it's also important to kind of recognize some of these things, that if it's taking a toll, I think the first thing that will actually come about visibly is your physical health, right? So I think that's the first indicator that if you start putting on weight, it probably means your company is doing well, but you're probably not doing well. And there are small telltales on some of these things to say, hey, what do you kind of do to identify some of these things, right? And it probably requires just a good set of friends to talk about it initially, right? And that's what good investors do, right? I had the liberty of having some of the best minds on my board, who are like amazing at what they do, to be able to even have a chat with them, which is beyond business. to also kind of start looking at different things in different perspectives. I think this is what good investors kind of bring to the table, right? So I think I would urge if there was a choice for most founders to also look at the quality of capital that they want to kind of work with, right? I actually love the work that a lot of family offices are doing. I think I mentioned to you last time we spoke on how family offices can actually start talking about some of the intricate knowledge that they have because they've been there, they've built companies and stuff, right? No, I mean, very few investors have built things in our country, right?
Yeah.
So they would have like shared knowledge, which is also like amazing. But family offices play an integral role to actually talk about how did they get to something like that. A very simple thing like succession planning. No one talks about it, right? Like how do you do transition of power? How do you do some of these things, right? And people think, wo jab size aayega, we'll figure out, right? It doesn't happen that way because it's a mindset issue. It's not a technical issue. It's not something like that, right? But how do you kind of start preparing towards some of those things, right? How do you kind of have that long-term sort of objective bias towards to say, how do you kind of build some of these things? I think family offices can do a great deal with something like that, right? So, and I honestly think our ecosystem is evolving really, really well on this, Srishti. I think at that time, I honestly did not have that much help. Today, I think a lot of founders themselves come to the fore on some of these things. I think there are fantastic avenues where you can talk your mind out and still not be judged for it. I think it's about finding your circle of faith or circle of trust, right? So I think that's what helps, right? So I would say it's real, the problem's real, but I think there are ways to deal with it, and we're getting better as an ecosystem overall.
Thank you for being so vulnerable and candid and sharing your story of dealing with depression. But what would you tell Rohit back in the day who is going through depression? Because a lot of founders I know still are not comfortable talking about it. And bringing it up to the investors can feel like a sign of weakness. Not everyone might have really healthy relationships with their investors like you did. What would your advice to a founder be who's going through something like that?
Uh, Advice would be to try and confide in someone, right? It can be your spouse, it can be your parent, it can be your sibling, it can be a good friend. But I think you just need someone to hear you out, and you will automatically feel the load reducing, right? A lot of people kind of think that they have to do the heavy lifting by themselves. It's okay to kind of be vulnerable. And I actually thought that showing vulnerability at that time, Srishti, was a sense of weakness, right? So one of my investors, I won't tell you who, but if he listens to this, he knows who he is, said, always give me bad news first, right? And by that, he meant that, you can talk to me, right? Most investors would all, would only be fair with the friends where, you can only talk to them when things are good. Uh, but he started until now, he's true to that to say, give me bad news first, right? So when you have folks like that, I think it just makes it a lot more easier to deal with. There are, again, like I said, telltales and signals to see if the issue is far more than having to be able to talk to people, then you need to seek proper help to kind of, ensure that someone kind of talks to you and manages your situation. But I think just identifying that even if it's a low point or if it is a repeated sense of occurrence, then I think people should talk about it. It's not a taboo anymore. So I think people should just open up without being fearful of being judged, right? And I'm guilty of this. I can tell you that I wouldn't tell anyone because simply I didn't want to hear their opinion about it, right? So because that would then kind of bring in a vicious circle again of why am I telling this person this, right? So uh, I think we need to kind of let down our vulnerabilities and be able to talk about it without having the fear of being judged.
Absolutely. I think, and God willing, more founders will have partners like you in their building journey who will be more empathetic to the founder's journey and being able to understand what highs and lows a founder goes through. But now let's talk about, your transition from being a founder to now first operator, now investor. You were you were one of the first few people who I know set up a family office back in the day. Now family offices have become so mainstream over the last 2 3 years. A lot of new family offices have come up. We've been investing for the last 8 years ourselves, so it's a bit fairly, it's a new phenomenon for Indian ecosystem, right? Family office as a concept, I remember back in 2016 when I started SSV, most people didn't understand the term family office, but now founders understand it, the ecosystem understands it, and there's so much power in the startup ecosystem that is behind these family offices. So let's talk about that aspect, because you started building a family office before you decided to institutionalize it. So what was the thinking behind setting up a family office at that point? And then we can talk about the institutionalization bit of it.
It's actually funny because at that time, like you said, there wasn't too many sort of structures or concepts or even sort of intelligence around to kind of start enabling how you have to think about it. So more than the want, it was the need because I mentioned Ashish earlier on. Ashish was moving on to start off business. And he was going to take a very specific check size, again, because of the sort of round size that he put in. And I just had to be a part of whatever he was building, right? So honestly, if you ask me, it was just an ability to kind of pool capital together to say that, I don't have that kind of money. Can I get few others to say that, hey, here's some opportunity and, can you just put this in, right? And thankfully, Ashish has done really, really well. So, obviously, when there's no looking back on it, but it was really bad, right? I think the situation kind of demanded it than any sort of structures or something. But over the period of time, given that the started happened, started kind of thinking about what that means. How do you kind of put more structures in place, put more discipline in place? Originally, and my advice to a lot of young family offices also would be to kind of find your own signals, right? It's very easy to kind of do this FOMO investing because, I've seen a lot of this becoming dinner table conversations of, I invested in X and I invested in Y and all of those things. I think we need to move away from that, right? It's okay. It's okay to start. It's okay to kind of, get into some of those things, right? But I think it's very important to kind of have the approach to say that how should I see this 5 years from now, right? It's not just representing capital, but how do you want to see this? Is there a larger ambition? Is there an ambition to say that it may not be a fund structure, but should you behave like a fund, right? And what does that mean in terms of discipline, in terms of a portfolio approach, in terms of outcome-led thinking? Do you want to apply that lens? Again, there's no right or wrong, right? Like spray and pray works. I mean, people have seen this, right? So if you have that sort of an ability, if you have that sort of network, go for it. But I think understanding the capability of the networks is also very important rather than, looking at everything that comes your way to saying if you can actually decide upon it, right? So things like borrowing conviction, right? So that's what I did. I honestly had zero time to even think about what businesses most people are building, right? But it was about a lot of borrowed conviction on if there was another fund leading it, then they would have done some good work. Then you spend time to understand how are they thinking about it, right? So I would urge people to kind of start thinking on that. So my transition from then to now was, like I said, more of the opportunity to be a part of the off businesses seed round to then being able to expand my network because, and again, if you go back to that vintage history, all the household names that you know today were all of that vintage, right? In between 14, 15, 16. So I had a front row seat with amazing founders where, I could actually do a lot of takeaway from their sort of differentiated thinking and bring it back to our business. I had that, sort of ability to kind of correlate and bring something and scale from there. So from that to then being able to work with some of the funds which are coming up in the country then where I was able to kind of participate in some of the ICs to kind of present my views, understand from them on how institutional capital thinks, to being a scout for a fairly popular firm, which is Sequoia back then and Peak 15 now, to represent institutional capital and what it means, right? How do you kind of go deeper and understand beyond just the founder-led conviction? So for me, it was a natural progression. Um, I would kind of, put that playbook out there for most young family offices. I recently met someone 2 weeks ago, I can't name, but, I told him you should exactly do what I'm doing, and do not let the ability to kind of, I mean, do not let the aura of capital that you represent to kind of give you that sort of a pedestal, right? Because the minute you start with that, you've lost the plot, right? You should go in with the notion, and he's a 20 something, right? So I said, dude, you don't know enough, right? And imagine the founder also that you're talking to, he's only interested in your capital and doesn't give you shit, right? Or it doesn't care for anything in terms of what you have to offer. So you have to earn that right, right? So how do you kind of do that? If you're going and building something, build it. If you have something that you can go and work for within the family, do it. Or if you're working elsewhere, do it, right? So don't let this aura of capital that you represent become the be all and end all, right? So I think kind of staying modest on some of these things to be able to grow in a steadwise manner, I think is what is useful. And I think your journey itself, right, is a great one to kind of, corroborate with, right? To how do you kind of do this, work with other funds, do so many other different things, be a founder. It doesn't matter, right? It has to come with a compounding nature to actually make meaningful sense. Otherwise, we're just representing capital, we're just deciding on everything which comes our way with no real ability to kind of even decode or, or to be able to kind of think about what is the veracity with which we are deciding, right? So I think that's what kind of helped me kind of transition to where I am. And 22, when we decided that Cloudnine we're going to go public, this was the next best thing that I knew to say that, hey, can I then transition this to a vehicle which would allow for private capital to come and participate, and that we can leverage and kind of build together, right? So that's how the transition to peer capital happened. So yeah, it's again, I think I've benefited from with the luxury of time, honestly, to kind of build it my own way. Also with the luxury of the ecosystem evolving on the same sort of timeline that I was part of. So again, like I said, I think right place, right time, honestly.
You've definitely grown up with the ecosystem as the startup ecosystem has matured in India. But there's such a deep insight that you just shared, because a lot of capital which is coming into the country from family offices are actually second and third gen entrepreneurs who might not have the operational expertise, where they have themselves built businesses but they are just providing capital. I think that's great advice that you shared for some of those second third gen entrepreneurs. But also talk about some of the best practices that you saw from family offices, right? Like you've just wrapped up a fundraise, and I'm sure talking to LPs from different family offices must have given you a deep insight into how different family offices are thinking about, focusing on sectors, stages, etc. So, what were some of your key learnings from this fundraise that you've personally just completed? And, are there any best practices that you sort of learned a lot from?
Yeah, so I think working with a finite approach works, wherein you allocate capital for specific markets. Uh, while we were fundraising recently, Srishti, obviously the public markets were on fire, right? So you can't compete with public markets the way they are doing what they're doing, right? So none of us can stand up to it. But, in terms of diversification on the overall capital allocation, I think being fussed about some of those things in terms of, think of it as an SIP approach, right? That I will invest during bad times, I will invest during good times, right? So as a family office, I've seen that a lot of them who are very good at what they do is having a portfolio approach towards, asset classes, on public, on commodities, on assets, on hard assets to private market of all nature to kind of build that portfolio approach and be very strict about the sort of capital you will kind of allocate, right? You can do a 10-20% on any of these either ways, depending on how the markets are. But I think having that structure works. Having the discipline to have like an independent counsel on a lot of these things. I wouldn't say that you need to have like an IC every time, but I think having someone who has the judicious capability of looking at information and presenting an unbiased view is, I think, super important. So we've seen good family offices where there are independent managers who actually take a lot of these calls initially, while the patriarchs then come in and, either bless that or, have their own thought points on it. There's a lot of people who actually do a lot of this work, right? So if this person is also part of the family, so be it, right? But I think they have to kind of move away from, like the maker checker, right? So you can't be the maker and the checker because it may turn out that more times than not, you may actually be wrong, right? So You either are the maker or you get an independent person who's doing the maker and you become the checker, right? So I think we've seen strong family offices kind of building it with this notion to say that, this can also be, again, if you think of institutionalizing some of the behaviors, right? I think this is something which is actually very, very good. And the third is also to try and see, again, like I said, if you take a finite capital approach or a finite timeline approach to be able to kind of drive towards exitability, to drive towards saying that, I'm going to reinvest this capital into the same sort of asset class. I think that sort of a rigor should also come in. I mean, it's great to be like, perpetual capital where, I'm not going to take an exit at all. But I think to drive the notion to say that it's not just notional IRR or MOICs or something, how do I kind of bring capital back and then build that into an asset class that we can kind of look at, right? I mean, anyone would do that in a public market context. Anyone would do that with real estate, right? It should be the same sort of rigor that you kind of apply to some of these things, right? So we should also, I've also seen strong family offices have an experiment pool or, that, this is for the new gen to say ki jaake khelo, right?
Experimental capital. Yeah.
To say, okay, you want to invest in yourself, you want to take up 30% of something and say, I will co-build, whatever, right? So try and do that. I don't think it's for every family office, but I think, it also helps keep the young gen. And I've seen this where, they are neither involved in the business, Srishti, nor do they have the sort of, appetite to go and do something on their own. So they kind of find this as their calling, right? So how do you kind of even encourage some of these guys to kind of go and do that, right? I think I've seen some of those too.
Yeah. And since you mentioned it, let me ask you what your answer was when LPs asked you about public markets versus private markets.
Yeah, no, we can't compete with public markets at all. It's just mad, man. I mean, it's good for a country, but it's just insane. As you know, I'm on one side where I sit on a couple of boards where, like Cloudnine and another company where we're going public, and the enthusiasm there in terms of the amount of capital available, the amount of interest available is just unseen, and honestly, those metrics don't make sense at all. I mean, I've been thinking, should you even do it? Because how do you sustain something like this? Some of these are irrational, right? But,
Yeah.
in a classical demand versus supply, the demand is so much that, I mean, what do you do, right? So
Yeah.
it's fine. But I think for us, we also encourage a lot of family offices to kind of think of it, like I said, on the SIP approach to say that, you have to start thinking like 5, 10 years, away, right? To say that I need to have a mix of portfolio balance on across all asset classes, right? So if there are some who've actually over invested in the private markets over the last few years, then they have their they're right in their ability to kind of stay away from making new investments further on from that, right? But some who haven't taken if you have large exposure towards public market, we kind of actually tell them that over a historical period, those sort of returns kind of neutralize to something which is far lesser than what is currently there, right? So I think good people understand that. It's also about point in time, honestly, right? So I think now, look, if you ask me where my money is also like, I would also go and put it in public market today,
Yeah.
right?
What is your personal asset allocation strategy? Whatever high level you want to share.
Oh, I am over indexed on private capital because I mean private sort of opportunities simply because that's the sort of asset class I believe I understand a little better. I've been miserably poor on public markets. I have a few folks who kind of help me with allocation on mutual funds and SIPs and so on. More from a long-term point of view, right? I don't take this view of how things have been over the last 2 years. I think the returns have been like 70, 80%. I know that's not going to last, but I'm not going to base any decision on that particular aspect alone. But for me individually, not a popular thing, but I'm over indexed on a lot of private investments that I've made.
Yeah,
Yeah.
interestingly, whenever I talk to fund managers or people who are running AMCs, a lot of them are building cash positions, but the retail investors in our country are all about equities or investing at the peak of the markets. So I think we are in for a rude shock. I don't know when it'll be given the momentum, but definitely something is underway, in terms of corrections. But, having recently wrapped up a fundraise, I'm sure every fund manager before they start out underestimate what it's it's really going to take. The entire journey of being able to set up a fund,
Oh
going
yeah.
through the compliances, all of that, right? Tell us about some of the learnings and the experience of raising a fund in India.
Oh, I think, look, if anyone is thinking, I'm going to transition into building a fund and all of that, if you think that grass is greener on the other side, I'm still finding where is the other side. Forget grass being greener, right? But it is a lot of hard work, right? Look, again, I think it's all in good, I think it's all in good stead from how strong the regulator is. They don't want people coming in with very short-term sort of thinking, inviting capital from others, and disrupting an asset class which is still evolving. But I think, I thought after Series E and such, I thought fundraising days are behind me. It just went back to day zero all over again, and it really didn't matter. I think it's exceptionally hard. My advice would be that if people can find a few anchors to kind of go with, I think try and do that first. There is a fantastic network of the government ecosystem as a fund of funds between SIDBI, SRI, NIF, and so on, who are very, very strict in their approach, and hence it takes a lot longer. People kind of underestimate the kind of time that is required or the kind of nuance that is required to kind of go and work with some of these large organizations. But we were told recently that as a fund manager, up to about 30 odd percent can easily come from, when I say easily, in quotes, that at least can come from this route, right? So they can be your first anchors of that sort. Um, but like a fund manager recently told us to say that, you guys have closed the first fund, so the hard work is behind you. From here on, you only have yourselves to blame if you screw up. So, no, with that, I think what we've typically kind of learned as well, Fund One is a lot of question marks. It's a question mark on the cohesiveness of the GPs. It's a question mark on the ability to work together, put a team together, build the sort of portfolio that you set out to kind of build. I think there's a lot of things where people have to kind of really kind of understand and appreciate how those outcomes will be built. I think we're very grateful for some of our investors who actually took that leap of faith. A lot of family offices, amazing founders from the network, who kind of believe in us more than the portfolio, because obviously the portfolio did not exist. So I think here on, it's actually going to be a combination of the portfolio, combination of the team, the cohesiveness, the ability to kind of, work on a thesis-based approach, the ability to kind of stay disciplined on the kind of portfolio that you build, the kind of ownership that you take, the kind of rights that you have. How do you kind of portray the value add beyond capital that we kind of, are screaming on top of to say that has that really happened or not? I think some of these things will be the ones to kind of come into play now on. But I think first fund is ridiculously tough. I don't think anyone telling any amount of it is enough. It is tough.
Yeah.
It is tough.
And that too for someone like you who's already spent so much time in the ecosystem, built such a credible business,
No,
and
not
has
just
a
me,
tremendous
Shrishti. Like, my partners are amazing at what they do, right? Like, Karthik's been a VC for the last 12 years. And if someone calls him a first time investor, I'm like, dude, then who's left, right? So he's amazing at what he does. Ankur, again, with 2 decades of experience in the same ecosystem. So all of us are hugely referenceable and such, right? So, even with us, I think, it's just tough, right? So
Yeah.
it's,
No, absolutely. And I agree. I think, you brought out something very interesting that a lot of people might not know, that SIDBI and other entities can actually anchor funds up to 30%. And they've done that for a new crop of GPs, which is coming up. I think that's a common theme that we've seen as LPs in the funds, where SIDBI is seeding so many new funds. And I think there's a whole new wave of operator led capital, which is coming into the country, which is fundamentally good for founders and the
absolutely, yeah.
ecosystem overall. Let's talk about that aspect also a little bit? Because, like you said yourself, a lot of investors previously had never built businesses, but now there are operators like you who've built phenomenal businesses and are turning onto the investor side. So, what do you think brings unique value from your point of view to the cap table when once you come on the cap table, and what are the differentiator insights that you can possibly bring versus someone who hasn't built a business before?
So I think the strongest thing, Srishti, is to try and build on relatability, right? Like I've built a healthcare business, but if you take aside the fact that it is healthcare, everything else which goes into it, building culture, building processes, building scalable processes, creating playbooks, how do you manage customer experience? So, using technology, a lot of these things are actually agnostic to whatever he or she is building, right? So I think that relatability is to kind of ensure that you don't go through the same pitfalls as any one of us have done, right? Is to try and anticipate some of those things to overcome earlier than later. I think that's what, we should strive as an ecosystem to evolve to what some of the developed ecosystems are as an asset class in this, right? To say, how do you kind of ensure that you said about founder burnout? How do you kind of identify that a little earlier on so that they don't fall prey to something like that? How do you kind of put pressure enough so that they don't resort to things which are unethical in nature, right? So how do you kind of do some of those things? How do you encourage people to start thinking about team first, right? So some of these things, I think, if you build something out there and you can see this in discussions, the relatability that you bring is very profound. And I think founders enjoy those conversations, right? Honestly, we need a significant more number of people to come and do this. Every time somebody reaches out to me, Mohit is a good friend. They just announced that he joined DVC as part of Z47's early stage investment vehicle, right? So Mohit's a good friend. I've been working with them with Mohit and Malika's mom's co for a long time now, till they obviously got acquired. And when we were jamming about this, I was telling him at the end of every sentence, we need more of such guys to actually come onto the investing side. And I've seen the kind of work he does. It's amazing, right? So he can only add a lot more benefit to the folks around uh, by being this than by being himself, right? So being by himself, right? So I think we need a lot more of this. And if you think of the developed ecosystems, take a US or a Europe, you would see that at the base of it, you would always have like an operator sort of mindset, which actually triggered a lot of these things, right? And hence they started believing in the opportunity and so on. So I think we're there. I think we'll honestly, if you ask me, I don't think we'll take as long. We'll probably leapfrog. Because it's also a little bit of, how the ecosystem evolves and, more founders getting exits, they're able to then kind of give that time back and we keep saying give back, give back. So this is one way of also kind of doing that, right? So if together a lot of us can come in and make the difference, why not?
Yeah, absolutely. And that's the pay it forward culture in Silicon Valley is what made it Silicon Valley at the end of the day. And if we can replicate that India, I think we can truly have a prosperous decade for the startup ecosystem, which we are already seeing signs of, because so many operators and seasoned founders have gone back to the investing side or putting in capital in different ways back into the ecosystem. But let's also talk about the stage where, you were building the thesis for the fund in terms of deciding which sectors to look at, which stage to look at, those kind of important decisions, which are very critical because you have to go and talk about your belief on certain things with all your LPs, and you have to be very bullish on certain things that you want to focus on, right? So, how did you arrive on those aspects amongst the three of you? Because it was a team that you had worked together and you had shared histories previously. So, what was that process like for you?
So there, Shrishti, I think the idea and the philosophy was to try and keep it simple. Um, the the indexation that we had was where do we think we have a higher right to win, right? So that was in our domains of experience, and that's what we felt should be the thesis of what we kind of go out there and do. We initially got a lot of opportunities or discussions where climate was the flavor of the season, and everybody started asking, oh, you know what, if you're going to invest in climate, we're with you. We could have easily said yes, but we said no, we don't understand any bit of it. We're trying, but we're not there yet, right? Like a good founder can see that you are learning off them. Not that it's wrong, but literally nothing to offer, and that's not the sort of investors we want to be.
Yeah.
So it was more about saying that where do we think we have a higher right to establish a good right to win, like I said. So the sectors we zeroed on was on health, fin, consumer tech, largely focusing on B2B enterprise, B2B SaaS, and gaming also as a specific sort of carve out on this because Karthik was anyway, was super good on gaming and has an amazing network of that. So it was actually a bit of both. It was both upstream in the sense where do we have our strongest sources of founders building, to downstream to say where do we think we can add value, right? So it was arriving at that sort of a junction to say that, where do we think we can actually aspire to kind of build. We are open to kind of thinking of different things. We're trying to build expertise within to look at a lot of more nuances internally in terms of, if be it deep tech of some nature, right? So, but we're not there yet, right? To be honest. So we still, I think as a country, where, a lot of things are changing so much, with disposable income, aspirational sort of outcomes. There are so much which can happen as an enabler sort of ecosystem, right? You apply AI, you apply any of those things. I think the enabler ecosystem itself is like so strong, that and you put the whole aura of tech around it and show that there are scalable opportunities. I think that's really what we kind of also building towards.
Yeah. And like, how did you decide? Is there a particular approach that you're taking within that saying that, health will get this much of our allocation versus consumer tech? Have you thought about that broadly?
No, I don't think we've kind of allocated capital to say that this is how we'll kind of do on a specific sector because look, we also want to build with a specific portfolio construct in mind, Shrishti. It's going to be about 20 to 25 companies. So allocating or fixing capital allocation for a specific sector would then mean that you probably take or you probably go after opportunities where you're not 100%, right? So we didn't want to force fit any of these things. It's more about the opportunity as they come by. So we are agnostic in terms of allocation on capital towards the portfolio construction, but I think the general thematic would be that if we find that there are more guys where we can build relatability and we find that there are great avenues of scaling and in our sort of timeline of what the fund needs to be, if there are more things than some, that's how it would be.
Nice. And how do you want to be remembered, Rohit? You've done so much, you've achieved so much at a fairly young age. What legacy do you hope to leave behind through your work at Peer Capital and beyond? Is there a North Star that you're working towards?
Honestly, no. I think right now it's more one day at a time. But no, I think at least as a if you think of an investor approach, right? I think you're obviously only as good as the founders you are with. So I think over a period of time, if we've been able to kind of add meaningful value to a founder's life, I think that's what we really want to be. And we don't really need to look beyond the word peer. That if we are able to kind of demonstrate ourselves as that, and that's really what we want to be recognized for as well. I would, and it's the same across the three of us. I've already demonstrated that I am more of the mindset of building an institution, right, which is beyond just the individual. It's the same with Ankur and Karthik to kind of see how do we institutionalize what we want to kind of do. We're still taking baby steps, but the idea would be to kind of build this as a culture and a core philosophy that goes beyond the three of us, right? So looking forward, if there is a way to kind of roll back and see if we achieve this, so the one North Star would be that we kind of played this philosophy really well, right? So I think we'd be very happy with that.
That's fantastic. And, I love ending with this question, which is around the regret minimization framework that Jeff Bezos uses a lot, where he looks at himself at the age of 80 and takes a lot of life decisions backwards, thinking about what he would think about those decisions when he's 80. So let's talk about what profound insights Rohit would have at the age of 80. Specifically, distill it into one significant learning, one regret, and one pivotal life decision.
First of all, I don't know if I'll survive till 80. Let's see. I think that
Well,
itself
you're
will
in the
be an
healthcare
achievement.
space, so if anyone has a chance, it's probably you.
Wish that was that easy, but yeah. One significant learning would be, looking back, right? Would be to say, give yourself more time. I think, to have like, and I keep saying this, right? And I've probably used the same metric over in this conversation as well. I think to give yourself time is probably a very important thing, and look at results over a period of time rather than immediate sort of gratification. I think that would be one learning. A regret would be, not opening up enough. I still don't do that enough. I'm a very, very strong introvert. My wife hates me for it. But I don't know if I'm twice my age by then, and would I have changed? I don't know. But that's one regret, and it's not natural to me. I keep a lot of things to myself, and it just it's a lot of pressure between the years, right? So it's not helpful in any nature. But that's a regret I'm still kind of working towards. I
Well,
know
you
this
have time.
already.
You have half your life at least to work on.
Yeah, and one, I hope it doesn't come back and bite us, but we, both me and my wife, Monica, we decided to have a kid very, very early in our lives. Yeah, it's a funny story which I'll share, not here, I'll share it with you separately, but
Yeah.
the idea was to try and, if we had the capacity to have a kid, to kind of have the kid early so that we don't go about decision making into a framework on some of these things, and then you don't even know if a kid makes sense or not. And thankfully now, we can kind of hold up to his energy. I have a teenage son, so to kind of hold up to his energy, and hopefully by then, be more adept towards being more friends than parents, right? So I think
Yeah.
we've kind of settled ourselves into that, and which is why I said hopefully he sees it that way as well, right? Not just says that, right? So let's see. That's probably one that which was contrary to what most people do, perhaps.
Well, if you're navigating teenage years this well, I think there will be no complaints in the future. I think teenage years are the hardest.
I can call him in and he can tell you another hour of what all we are doing wrong, right? So
I'm sure. That's the job of parents, I guess, to be blamed regardless of how much effort goes into it. But thanks for being so vulnerable and honest. I know that you are an introverted person, but you still shared a lot of vulnerable insights into your journey and dealing with things like depression and being able to navigate that. There's so much wisdom for anyone who's watching this. I love ending with rapid fire, so if you have time, we can quickly jump into it.
sure.
Yeah. Okay. Are there any books, podcasts, or resources that have had a profound impact on your life or career?
So books, I think is more, time and space again, right? Like a book now, a book a year back and stuff. Anyone building in healthcare, I love telling people to go look up Fred Lee's Nine and a Half Things. Disney would do if they ran your hospital. It's a mouthful for a topic of a book, but it's a fantastic book, Srishti. And I know you like healthcare. I'd love for you to also kind of take a read. It is timeless, it's legendary, it's brilliant, right? And it's such a simple read, and it's just amazing in the kind of impact that it will have on you. So that's one on healthcare. I think I recently started liking hard things about hard things, right? So it's just in your face and kind of tells you about some of the things which you probably know or heard of or something like that, but it's kind of good to understand the nuance of where it's coming from. I'm new to podcasts, other than what some of my friends actually create. I haven't been following anyone rigorously, but I think, what's the one by Reid Hoffman I recently listened to?
Masters of Scale.
Yeah, I think that's fantastic actually.
Yeah.
I think it was nice. It kind of takes you along. I have this feeling that a lot of podcasts are a bit all over the place. It's not there's no one anchor hook which kind of delivers to what it is. And I think I like that. I've only heard like one or two, but I think that's more recent at top of my head.
Yeah, that's very immersive storytelling compared to everything else which is out there.
Correct. Yeah.
Definitely.
Yeah.
One professional and one personal goal over the next year.
Professional goal would be over what next year?
Yeah.
Oh, next year would be to see if we can uh, build enough momentum to see if there is a fund too, honestly.
Yeah, I think as they say that fund two is the real hard fund to raise because then you actually have performance to track it too. Which
uh,
person? Yeah. Which
Personal would be, I think, ideally want to like my metabolic age, as it showed was 39 while I'm physically 43, going on 44. I want to try and keep it at that or not cross 40 on a metabolic age for a while longer. So I think that'd be a good personal goal for me.
amazing. Which person has the most formative impact on your life?
Oh, it's been my dad, for good or for bad, for all things bad, especially on the way he has abused his own health. It's a great reminder for us to not what not do what he did. I think the good is to see the largeness in people, to kind of also have like big vision and always think 10 steps ahead. I wish I can be like him, especially on that, because I think he saw things which I don't think I was capable of seeing, and it's possibly his experience or whatever. But I think he's had the most profound impact on me at this time. If this was an award ceremony, I have to mention my mom and my wife. So please consider that they are having a great impact on me as well. I don't want to get beaten up after this.
If you were to write a book about your life, what would the title be?
Oh, book. I don't know. It may be a boring title, but I have this tattoo on my arm which says "Attitude defines life." I think that would be a good one to at least sum up, on at least what it would reflect upon me. I don't know if that makes a good title, but at least I'd like to go for it.
It does. It has a nice ring to it. What are you most proud of?
Oh, I'm just proud of the company that I keep and the people around me. I think the biggest achievement, yes, Cloudnine is a really, really strong beacon in my life. But it wouldn't have happened if not for the people who are actually kind of doing what they're doing, right? So I'm actually very proud of the people that I'm with, the company that I keep, and the kind of people who are in my life.
It's so amazing that, I've done about 30 of these podcasts, and most people's answer to this question is always about people or relationships, because I think that's truly what makes life worth living, right? In terms, your quality of relationships is the truest indicator of your happiness and health
True.
overall. What's the kindest thing anyone's ever done for you?
Kindest thing was people wishing me on Teachers' Day. I was like, dude, no, I'm not. Yeah, I thought in one I thought one said it makes me look extremely old, or appear extremely old. But no, I think that was super kind. And it's not just one individual. A lot of people, did this as like, okay, I think it's a slow news day or something. You have nothing else occupying you, and you're wishing me on Teachers' Day. But I thought that was really nice. Made my day.
Amazing. I loved every insight that you shared with us, Rohit, today. Thank you for taking out so much time and being with us today on the show. I'm sure a lot of people will benefit from these conversations, and so much more power to you on your journey as you build peer capital from here on.
Thank you, Shrishti. Yeah, love the chat myself. And if we can, leave the world a better place from where we are today, I think that's job well done, right? So happy to be a part of these conversations. And like I'm available if someone wants to reach out to me and have these sort of conversations, time willing, I'm there. The simple idea is to share experiences and make sure people kind of grow beyond that. So thank you for having me, Shrishti.
Amazing. Thank you, Rohit.